Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. Well, it is a really kind of a bummer Monday, I tell you. It's the markets are down across the board, and it just looks like another one of those downward legs. Basically, just wanted to show you the spider, and we're definitely down on that. We're up a little bit after hours, but we were down almost a little over 0.5% at 360, and we're moving down a little bit more. It, there is a possibility that we could move down to about the 320. That's range. That's kind of what I've been unfortunately looking unfortunately looking at. So let's get into it. Basically, um, the basically the losses are the losses are mounting. And hopefully, I'm pretty much out of the market, but I do have a little bit of a little bit of a little bit of a position in the market. Not much, but oil was down a little bit. Here's the look at my portfolio currently. Very, very, very limited in terms of. Oh, come on. All right. Let's see if we can. Let's see if I can get this back. There we go. Yeah, pretty limited in terms of my exposure. About little less than a quarter in the market, mostly in cash. And as you can see, biggest position is in ExxonMobil. It was down today. Also in Dino, very small position there, and LNG. And that's about it. Nothing really more than that. So it's very small position, as you can tell. This is the spider. Just wanted to give a look, see at that, and it is down over, pretty significantly. Um, we are we are basically almost ready, I think, to go another leg down. Just wanted to show you this particular chart here, both for TikTok and for um, online here. And this is the VIX. We did have a tick up on the VIX today. And it does look like we are getting more volatile. So I do think that it's very likely that we're going to take another leg down here. But we can always hope. We are basically always only 3 days away from a follow through day. We had a follow through attempt on Friday. It failed, and so this count has started over again. And hopefully, we can get something there. Basically, the best thing to do right now is basically to just stay in cash. There will be a follow through day, and it will come, and when it does, it's going to have tremendous opportunity. But for right now, we still haven't topped out on the negative sentiment, and so it's just that's the way it's going to look at least for a while. So I think that basically just keep your powder dry and wait. Just really you should favor the heavy cash position right now and not a whole lot of stocks, because I do think we're going to take another leg lower as we find out more about what's going to happen. Of course, with the interest rates, more than likely they are going to spike up here. So that's just something to be aware of, and and not to get too freaked out about. But I think that's definitely the case here. Let's see what else. Let's just get to some questions. Thanks for holding, and here we go. Let's see. Okay, get over here to. Oh, okay. Did I get? Yeah, there we go. So here we are. And all right. And on the questions, first question basically coming to us from from Hans. Hey Jim, are you seeing the Amazon reach below $100? Okay, well let's take a look at Amazon. The chart on Amazon. Get over to the chart. There we go. Amazon chart. And basically, here's kind of what's going on with Amazon. We did have a close today of 113.67. We're in a downward trend on Amazon. I think that also another, I'm looking possibly to short, um, I'm looking to possibly short Walmart. Haven't done that yet, but all of the retailers are weak. The sales just aren't there. And do we think it's going to go all the way to 100? Well, there's a good possibility of that because it did make a low at 101 back here. So there definitely is a trend that way. And we have tested the 21-day line and we're continuing to move lower. So where do I think that's going to be? I'm looking about mid-November for that to happen. That's kind of where I'm looking at it. If we look, kind of draw the line there, and we continue on the same trend for Amazon, we're looking at it basically crossing over the 100 line, and in about November, I would say the second week of November is where we're going to see probably some more damage when it comes to when it comes to Amazon. So that's kind of my that's sort of my take on Amazon here. All right, let's question from Jay. So about mid-November is where I'm looking at it. Okay, for Jay, Jay is writing in and said, "Will the spy retreat tomorrow below because it's below 362?" Yes, I think there's a good chance of that if we continue on the trend. And the reason why, let's go over the spider, is because 362 is the resistance, and I think that is likely. And again, I've been talking a little, about a retracement down to about 320, and I think that's and unfortunately, unfortunately, very very likely. 362 is the bottom of the consolidation. There we go. Put that in. I didn't quite get it right. There we go. Okay. My line is not quite the other. Okay. So I definitely think this is about 362. This is where I think we're going to see some weakness. Definitely a lot of selling in the spider. So yeah, I do expect a move lower probably by the end of the week if we continue on this trend. So that is definitely that is definitely the case here. I think we're going to see a move below 362 on the spider, and I think eventually by the end of the year we're probably going to be about 320, and that's what I've been sort of. I think that's going to be the bottom of about 320. Charles is saying, "Is it time to short?" Um, Looks like a big squeeze is set up on the market. Yeah, here's the problem. Here is why I have been very careful regarding any of the shorting because I do think that there is going to be a squeeze. I think that that's something that we've got to really be careful about, and this is one of the reasons why I'm not short right now. Not that there's not a lot to short, but I think that we still could have some very very severe short squeezes on this market because I think everyone pretty much is bearish on the market right now, and when that happens, that's when you get the squeezes. So that's part of the reason why I'm staying pretty much out of the market right now and just waiting until we get after some of these squeezes because they can be very severe. They can be very very severe. So it's definitely something that we want to be super careful on, and I definitely think we can move lower. All right, this is a question from General. Do you think retail like Walmart will continue to? Yes, I do. Yes, I do. I think it will. I definitely think we're definitely going to have some more pain when it comes to Walmart. And the reason is because of their inventory. They just didn't sell as much as they thought. They've got in many of their locations, they've got containers filled with stuff that they need to unload, and so they're having to discount. And this is not a really good situation. It did spike up a little bit today. Walmart did, but here's what I'm looking at. I'm looking at a movement, and I'm not surprised that it spiked today. I'm looking for it to kind of rally on up to about the 50-day moving average. If I could get it, if it gets up to about the 50-day moving average, I think that's an ideal place to short it. And let's see, let me get the exact number here for it. But if we come up to this line here, that's about 133.30. You see, and we're only about four points off it. If it comes up a little bit more, and I want to check to see kind of what the 10-minute chart is, but you can see at the end of the day, we did have again a drop, but there is this, there is some power coming in here. So I think if we can move up to about 133, right about here, 133.50, you can see that's kind of where I think that's where would like to short. It's right about here. Now, I don't know if it can rally this far, but if it can rally up to this level, then I am very interested in potentially shorting it there because the inventories at Walmart are growing, and it's just one of those things where I think we're gonna possibly have a situation where we can have we can have a nice move down and benefit from that. All right, here's a question from TikTok. Thank you so much from watching from TikTok. So let's look at Tesla, TSLA. This actually is bucking a trend today. It's actually moving up. So go figure. Um, I think one of the things about Tesla is that it's still trading within a range, and I think that's definitely an issue here. So it's still trading in this range, but let's move to the bigger chart. Um, but as you can see, it's still moving down. It's the bottom of the consolidation is right about here, 205. So currently we're at 222 on Tesla. I think it's got a little bit longer to drop. I think it's going to drop down to the bottom of the consolidation, which is right here, and then I think we're going to get a bounce. But again, the trend on this is down, but by and large, currently, Tesla is consolidating, and this is the consolidation basically from about here down to here. And it's sort of just moving, kind of oscillating in between here. So I would not be a buyer of Tesla here. I just don't think that. I think that you could get easily burned on this one. So, again, here I am. My big advice is right now for cash until we get a follow through day. I think you just got to be super careful, and it's not easy. The hardest thing in investing, I believe, is waiting, and I think that's kind of where we're at now. We got to be waiting. We got to be getting our ammunition ready, but we can't be jumping the gun. Let's look at AMD. Charles is asking about AMD for shorting, and again, shorting. The problem with shorting is is that when it becomes obvious, you don't want to short it. I mean, that's one of the reasons why I am interested in Walmart because it is a leader. There's a lot of meat left on the bone, and I think it's going to turn lower. And the problem with AMD, even though it's a great company, it's been on the decline really since really November, the end of November last year. So quite a long time that no, that AMD has been in the downward trend. So I'd be a little bit careful about shorting it here. Really to short, I think it needs to come up at least to the 21-day moving average, or possibly the 50-day moving average. Right now, we're pretty far away from those two things. We're 17% below the 21 day, and we're about 30% below the 50-day. So this is not a good place to short. You want it to come up the way you want it to short is you want it to come down and then rally up to either the 50-day line or the 21-day line. And then from there, that's where you want to do your short. But right now, I think that you just really can't do it because of it's just not the correct setup right now. So I would say on this one, no short for right now. I would be real careful about that. All right, let's talk oil. This is my favorite subject because this has really been the only sector of the market that has really done well. So let's jump on over to the XLE really quickly here. And for everybody that doesn't know what this is, the XLE is the ETF that covers the energy sector, and that's primarily oil and gas. And this has been kind of, It's down a little bit today, but this has been very, very good. Notice with real import that it is trading above the 200-day line, the 21-day line, the 50-day line, the 10-day line. So it's basically trading the correct way. So this is still moving up. This is still an upward trend. And so there are some oil companies I think that are looking pretty good. Now, one of the ones that I was rallying, I want to look at COP. This is ConocoPhillips, and this is a large international oil company that has got some very, very good numbers. And here's the thing: I want to. It was down a little bit today, but I want to show you this chart because I think it's very, very good chart. And this is ConocoPhillips, based in Houston, Texas, large integrated oil company. It was down a little bit today, about 1%, and down a little bit after hours, but it's right at the buy point, and the buy point is 115.47. So it's basically, it's got this cup with handle formation, 98 relative strength, very strong. If you're going to buy anything, you want to buy something in this area because this is the area that is showing the best performance. Basically, it's got an 89% checklist, which is excellent. The only thing is it isn't really being accumulated that much. Well, I'm not surprised. Most of that accumulation has already gone on. But if you look at the ownership on it, we have 2,693 funds in it. So that's very, very significant. We also have some very large funds that we track. JP Morgan Large Cap and Contra Fund. These are both Class A funds. So if you got to be in the market, this is one of the better ones. And I definitely think that we're at a good place that you could technically buy it. We're just slightly above, and this is key. We're slightly at about 110. That'd be a good place to buy it. We're about 5% above the 21-day moving average. It In this kind of market, it's a very technically it's a tough market to trade, but I definitely think you could buy it here. I wouldn't buy a lot of this. I'd buy maybe a quarter just to keep your toe in the water. I'd buy maybe a quarter position in this one, but I do like this one a lot. It's COP, and that's ConocoPhillips. So there you go. All right, let's look at the TBT. This is from Christina. Thank you so much for bringing this up. The TBT is an inverse ETF that is two times. And basically, what it does is, and you probably remember from your finance class in college, as the price of a bond, as the interest rates go up on a bond, the bond value falls. So this is the inverse of that. So this fund follows the interest rates. Now with the TBT, if we are expecting a higher interest rates, which I definitely am, I think we're gonna have another raise from the Fed. And remember, you don't want to fight the Fed. It's a losing battle. Um, this is going to continue to move up. Look at this. It's just uh, there was a great buy point here at 29, and it's just continued to move right up, and it's trading above the 10-day line. Now the question is, could you buy it here? Well, I'd be a little careful. In this market, this is just a tough market to trade. But it's about 6% above, is 5% above the 10-day line. I do think this one's going higher, though. I really do. I really believe the TBT is very, very likely to go higher. Why? Well, the reason is because the interest rates are going to more than likely go up, and I don't think there's going to be any easing at this time. Right now the Fed is, it's very aggressively raising rates because it's trying to cut off inflation, and that is affecting everything. So you got to be super careful. And so right now, believe it or not, the number one asset right now is cash. So it's it's a very, very funny market right now. All right. Is there a good time to buy Tesla? I think you got to hold off on Tesla right now. I think it's in a consolidation. I think it was a good buy last year, but right now, we haven't bottomed on the market. I think the market is going to go down to about 320 on the spider. We're currently at about 360, a little bit 362 thereabouts. So we're going to go lower. I think we're going to go at least 40 points lower. And remember, um, right now is the time to be building your watch list and basically holding off on buying because we are going to get a fall through day. Now, I don't know when that's going to be. It could be in as little as 4 days, or it could be as 4 months, or even 4 years. But we're definitely going to come. Now, I do believe that by the end of the year, we might be seeing the lows in the market. So we will see. Usually it happens when everybody has capitulated and they say that, it's terrible and it's never going to come back again. And that's usually when to buy. So right now, it isn't the time to buy, but it's the time to get ready and it's time to be in the market. Um, and the way you get in the market is just with a very few shares, like I'm doing, basically staying mostly in cash, but having a few little a few little toes in the water with a small number of shares with I consider very good companies. All right, TMV. Let's look at TMV. This is for um, this is for TikTok. TMV. And let's take a look at it real quick. And this is the bear treasuries 3x. Wow, this is really leveraged. This is really really leveraged. And of course, it's going to do well in an environment like this, obviously, because the treasuries have been, if it's a bear treasury fund, it's going to do well. Why? Um, because just as the value of the bonds go down, as the interest rates go up, the value of the bonds go down. So that is potentially very good. Now, here's the thing about these leveraged funds. They depend primarily on derivatives. So they don't buy the underlying shares. So they tend to be very spiky. They tend to move very quickly one way or the other, uh, and then not so much. So be very careful if you're in one of these. If you get to a 5% profit on one of these, it's probably a good idea to start taking profits because they are volatile and and that's why they are volatile. 99% relative strength on this one. This, of course, is an ETF. And, again, this one a little bit aggressive for me, 3x. I'm probably not going to do that in this kind of market. I'm just going to do in this kind of market. I'm going to probably just hold off or short the underlying you short the underlying shares because I don't I in this market you can get really really hurt with leverage. So you want to be careful with leverage, and there's many different ways, of course, to do leverage. And it's not just the ETF fund; it can be other stuff as well. So you want to be very careful with the ETFs, at least as far as that goes. All right, switch this back. Great. Okay, this question is there we go. This is from Doc. I love that. I love that Doc. That's a great handle there. And basically, I am currently reading the O'Neill book. Great. Can you expand on how long you have to be using Cancelim and your overall experience with it? Thank you very much. I basically was introduced to Cancelim back in 1984. Wow, a long time ago. By a boss of mine who was a very, very accomplished trader. Unfortunately, he's passed away, but he taught me how to trade spreads and options. And very, very wonderful guy, Howard Byron. That was basically when the first edition of the book came out. It, it's funny. Uh, Basically, I've been using it on and off since about 1984. Now, of course, back in 1984, I didn't have any capital, so it didn't really matter as much. But I did make always a little bit of an income trading options on the spiders. So um, I think it's a very good thing because one of the things about CanSlim, if you really follow it, you will be out of the market when the market is dangerous to be in. Okay, this forces you out of the market because one of the first rule in CanSlim trading is that if you enter a position you want to calculate what the 8% loss would be, set your stop loss there and just hold it. Because that way, if it goes below that, now it's very frustrating and you get cashed out, but you protect your capital. One of the things about Ken Slim is very good at doing is protecting capital. Right now, in this kind of environment, you've got to be very, very careful about protecting your capital. So that's the part of the reason why we're not in the market. We're full force. We're only in it. And really, I'm only in one of my portfolios. I have a number of portfolios. I'm in cash in every other portfolio except for the one that I'm showing, and I'm 75% in cash in the one that I'm showing. So I'm very much in cash right now. When the conditions change, when the follow through day happens, that's when we're going to come in. So if you keep watching this, I will basically, hopefully I'll get up on the mountaintop and scream that we have a we have a fall through day and it's time to start. It's time to start back into the market. But right now we just got to be. Yeah, it's terrible. We got to just watch and you know, it's watch. We are still we're still mirroring 2008. Do you think that this correction is going to? Absolutely, I do. I think it's going to continue for quite a while. This is probably I was around in the 2008 pullback. I was also around in the 2000 debacle, and I actually went back to the 1987 one. So I've been on several. The thing about this unwind that I think could be more serious is that we have a serious debt problem in this country, and we also have a baby. And then this is demographics. What has been pushing the economy in this country for the last 40 years has been the baby boom generation, and the baby boom generation is starting to retire and pull back, and this is making demand drop. And so this has been a situation that we have had in a long time is we are flagging demand. This is one of the reasons why I'm looking possibly to short Walmart because the Gen Xers, they just don't have the buying power that the baby boomers have, and the baby boomers, of course, are being all retired, and of course they don't have the money. And right now, prices of assets are relatively high. So even if you had a good job and you had a lot of down payment, you probably couldn't buy many of the houses that are available. I think in Southern California, something like only 15% of the people can buy a house. So uh, there's going to be renters for a while, and the market will eventually correct itself. The asset prices will fall, but it's going to be relatively painful, I'm afraid. And so that's kind of my soapbox there. So don't want to be overly critical or anything. So let's go with the next one. Oops. Yeah. So here we go. MOH. Let's look at MOH and see what we got. MOH. There we go. Oh yeah. Okay. Molina Healthcare. Well, I used to have Molina Healthcare. It's not the greatest healthcare if you have it. It's a great company to own. It's not great to have a company to have insurance with. I can I can attest to that. Yeah, this is looking very good. Healthcare is a very, very defensive sector, and it is, it has been performing well. But really, right now, the only sector that has consistently been performing since the beginning of the year has been oil and gas, and so that's, I think, kind of where you want to be. So, I would, maybe you could nibble here with this. It's looking pretty good, but I'd be careful on this one. I would be careful on this one. But it is coming out of a nice double bottom consolidation, which is a good pattern. But it is having a little bit of resistance right here at 391. So I probably would stay away from this one um, more than go for it. So I'd probably stay away from Molina a little bit right now. All right, Sam, thank you very much. What do you think? Oh, when do you think we can say it's a bull market again? Well, basically, what we're looking for, Sam, and this is a very good point that you're bringing up, is we are looking for what they call a follow through day. A follow through day is 4 days in a row of increasing prices in two or more of the major indexes. That's the either the S&P 500, the Nasdaq, or the Dow with increasing volume, and we're not there yet, unfortunately. We almost had a fall through day on Friday, but the market pulled back, so we started the count again. And unfortunately, today, we started the count again because we did not get an increasing day with increasing volume. So we just got to wait for that fall through day, and the fall through day can be as short as 4 days away from where we are now, or 4 months, or 4 years. But more than likely, it's going to be. I think we're probably. I think by winter we're going to see capitulation in the market probably in this final quarter because I don't think the retail numbers will be good. And I think a lot of people are going to have to rebalance their portfolios at the end of the year, and I think that's going to cause the market possibly to move a little bit lower. Again, I'm looking at about 320 on the spider. It's kind of where I am looking. All right, so we're about 30 minutes, so let's take a few more questions and get to the many as we can. LEP. Oh, LEP. This is interesting. LEP. Uh, and there we go. Oh, well, LEP. A little bit of a. It's a little bit slow today. Oops. There we go. So for some reason, it's not pulling this up. Let's let's see if we can get another question. There we go. All right. So here we go. Denbury, possibly buyout from ExxonMobil. Yeah, that's very interesting. Not surprised. Not surprised. Exxon, is going shopping and they have the money. Of course, as everybody knows, I'm in Exxon right now. Denbury is also an excellent company, actually based here in Plano, Texas. Uh, the thing about Denbury is that they have a lot of, I think they have a lot of holdings in the Permian, which has sort of been a good location for them. I mean, well, it's the number one area in the United States. Now, of course, we have right now a hostile federal government for drilling of oil. That's part of the reason we have um, some of these issues. But let's look at Denbury here. There we go. So yeah, it had very. Oh, look at this. Yeah, no, I think you're right with this possible buyout, and that would make total sense because the volume was up 483%. I didn't see this one today. This is definitely a spike, and look at it's up after hours too. So yeah, okay, and it's got earnings. I think you're right. Yeah, it's coming out of this beautiful, cup pattern. That's perfect. That's a perfect example of why oil and gas is the place to be right now in the market. If you're going to be anywhere, and I wish I had been in this one. Boy, I tell you what, I'm in Exxon, but I'm not in Denver. I'm not in it's always the acquisition that's the better of the two. Very interesting here. Very nice call there. Thank you for that. Very interesting. Very interesting. Very interesting. Okay. All right. Let's look at Denver setting new highs. Yes, and DRV. This. Let's look at DRV too. These are also all oil and gas, of course. This is this real estate. That's interesting. Another interesting one. Okay, so let's look at the XLE, and let's look at the XLE because that's going to tell the tale with a lot of this. Yeah, there we go. Move it over. Let's move it over to the XLE, and then what I'm gonna do is I'm gonna plot the XLE and the other ones. Okay, so yeah, this is doing. It's off a little bit. It's down 2% today, but I think we're going to see this one pop. Let's look at the XLE against Denbury. Yeah, against ExxonMobil. There we go. So, yeah, there we go. There's kind of the comparison here. Denbury, of course, possible acquisition by Exxon, and the XLE is basically pretty much the same as Denbury. So, interesting, but obviously the outperformer. This is part of the reason why I had the position in Exxon. It has been the outperformer right now, at least for right now in the oils. All right, well, great. Let's see. Is it dead? Okay. MCK Mac MCK. Look to see McKesson. You would think this one would do great. This has got a blue dot, so this is up, but the volume is weak. See, this is what you want to. Okay, this is interesting. Whenever you see this, you have a low volume. It's up on a low volume. That's when you're almost and it's near a reversal line, that's kind of when you're going to see it possibly move lower. Now, I don't think this is a short, but that's what you're looking for when you're looking for a short, is you're looking for it to be moving up on lower volume close to a index line. That's where you want to short it. But I don't think you want to short McKesson. It's just in this consolidation, just really doing nothing there. Okay, well, I didn't get to everybody, but I'll be back tomorrow at 5. And thank you very much for taking a look at the show. Also, if you're not already a member of the Action Trade Alerts, super easy to do. All you have to go is over to, oops, all you have to do is go over to www Dallas Trading Floor. Super easy to get on that. Just need your first and last name and an email address, and send out all the good stuff to you. So if you're not already a member, please, please, please like the show. Hit that like button. That helps us get out to a lot of people. So smash the like button. That really gets us. That gets us new members all the time. Appreciate it very, very much. And we will be back tomorrow at about 5 o'clock. Everybody, happy trading. Stay in cash right now. Wait for the follow through day. It's coming. I know this is tough, but right now the best position to be in is cash with very little exposure. The exposure should probably be in oil and gas. So until tomorrow at 5, happy trading, everybody.